I'm at the auction being held by Allsop's Commercial at the Park Lane Hotel in London. It's the first commercial sale of 2010, and it's regarded as a benchmark sale by the industry. Allsops are offering over 120 lots today. This time last year they offered just over 100. It's being perceived as a good time for selling. Prices are strong. 2009 closed with some very strong sales, and Allsops themselves increased their market share by 10% to 44% of the market for commercial auction sales by the close of last year. There's a range of properties that have been on offer today. Prices have been guided from as low as 115,000 up to over 2 million, and there's been significant demand for correctly priced stock in the room. London seems to be selling well. There's a desire to buy, and funding remains an issue. So we'll be speaking to some vendors later today and traders to get their opinion of the significance of this first sale.
1,950, gentleman's clean, right up there, standing up there. That is sold. 1,950,000.
What sort of prices have you been achieving today, and how much above expectations?
Well, some obviously are better than others. We just sold one in Thayer Street. We sold it for shop and upper part, shop with accommodation above. We sold for 1,950,000, which I thought was a really good price. I haven't worked out returns. I don't know. A bit beyond me. Got other people to sort that out for me.
Okay. There's been speculation about a W-shaped recession, and this is the first sale of the year, major sale. What's your feeling about the sort of sentiment, buyer sentiment in the room today? You've been talking to people, I noticed.
Well, yes, I have. I don't know about a double dip. I don't know. All I know is, at the moment, prices are high, and we're selling in central London. We're back to where we were. The prices are back to where they were 2 years ago. So we're taking advantage of a very, very healthy market.
One of the lots sold this morning, a tiny little shop in Bridlington for a 4.6 yield. It was let to Specsavers. With that kind of money coming into the market, do you anticipate selling throughout this year?
Well, I think the price is wonderful. I didn't realise it. I think we've got to understand there's so much money around. And what safer place can you put your money? If you're getting, all right, it's 4.6%, but if you're getting 0.5% in the bank, it still kind of makes sense. Not that I would buy something in Bridlington. I still believe that central London is the place to be.
Obviously, central London is the main thing. Anything in central London today is going for hot money because people want central London, whether they're foreign buyers, funds, private investors, locals. It's one of those areas that is always going to sell. And I think those are the sort of places where you can't go wrong with property at the moment, but it's not easy to buy because the prices are so strong.
Duncan, the first sale of the year, and it's a benchmark sale so far as the industry is concerned. What's the market sentiment been like in the room today?
We were very lucky, I think, to have a good selection of real estate that our vendors asked us to put in the catalogue. A good selection of London investments, some very good larger lots that have found favour with the buyers. Traditionally, London has always been a slightly stronger market, but today has shown that that remains the case. The good quality income in good quality buildings, correctly priced, finds a very large number of buyers, and we had a lot of competition downstairs. Where there were weaknesses, I think, where vendors perhaps were a little aspirational in pricing, where they were missing some of the fundamentals of property investment, where locations perhaps weren't quite so good, or where tenant covenants weren't quite so good. And the market very clearly preferred to buy those investments that fulfilled all the right criteria for good property investment. So location, covenant, lease length, and lots of competition for those. I think competition will drive pricing to quite surprising levels at some stages. The well-intentioned vendor is a very popular person in an auction room because if things are priced to sell and vendors are bona fide vendors and don't change the pricing at the last minute, then they will have the appreciation of the market shown by competitive bidding for their properties. And there's nothing better than competitive bidding for finding what things are really worth. But you've got to get them started.
And outside of London, what is the appetite like for stock outside of the capital?
Again, good quality will always find a buyer, but there is, I think, a little bit more sensitivity to shorter lease lengths, to over-rented situations, particularly in some of the weaker town centres, where I think the market is telling us that where properties are over-rented, that is being factored into purchasers' bids rather more than it has been of late. I think there's a perception of an overhang of over-rentedness in some areas of the market, and investors are very conscious of that. They don't want to see their income streams declining over years. So a rack-rented investment is always very popular. Over-rented is more difficult to price correctly.